Hey, what's going on, everybody? It is Monday, Memorial Day, May 31st. I just sent out the new issue of MMT Trader. If you want a copy of that, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial. So, end of the month. June is going to be a very interesting month, folks, because 21 states will be ending the enhanced unemployment benefits. That's that additional $300 a week that people are getting. And I've spoken about this in a prior video. It's going to be an interesting, real-time experiment we're going to see, because people contend that these payments are keeping people from going to work. These are all red states, by the way, that are opting out of this program. They're saying it's keeping people from going to work. So we'll see what's going to happen. We'll see what's going to happen in these states that cut the benefits. We'll see what's going to happen in these states that don't cut the benefits. But what concerns me most is that, this is some fiscal risk right here. I'm all about these fiscal flows. As you know, that's the core of what I do. And when you cut these flows, there are consequences to that. Now, it may not be enough to, unsettle things, but then again, it might. The good news, at least for me and my subscribers, is that I follow this information every single day. We get the flows every single day from the daily treasury statement. I know how to parse through that data, and I keep a spreadsheet on this. I keep a database on this so I can see it real time. But call me skeptical. We got this coming up in July. We have this coming up in June, 21 states, 2 more will go in July. But the bulk of these cuts will happen this month in June. And then we got the debt ceiling at the end of July. So, there are 2 things here that, at least from a fiscal point of view, they represent at least potential risk. Now, the market is very high. It's justified for being high given the fiscal flows and the economy reopening. That's another thing. These cuts to the benefits may not be that impactful because we're still seeing, the economy open up. Here in New York, things are really starting to boom. People are everywhere, restaurants, we dropped all the mask mandates for people who are vaccinated. Things are really starting to open up. So that's good. That's a positive thing, and we continue to, we need to see more of that, and that's happening, so that's good. But we'll see. Again, everything boils down to these flows, and I go by the numbers, and that's what is going to determine the outlook. If you look at sentiment right now, it's, again, something else I've mentioned, lots of neutrals. There are a lot of people sitting on the fence. You can look at that as like potential energy. Those people are going to get off the fence at some point. The market's going to drag them off the fence. It'll either be, if we go down, they'll sell at the bottom, or if we go way up, they'll buy at the top. Either way, I'm going to tell you right now, when you see those people get off the fence, you got to go the other way, because they're going to sit there and they're going to sit there and they're going to sit there until the last minute, and then it's going to be like, oh, we can't take it anymore, we got to jump in. So they're either going to sell in the hole or they're going to buy, and that might be an important top. If the market goes up, which I think that's what the outcome is going to be. But again, I want to emphasize that June is going to be an important month with these cutbacks in the benefits. The other thing I should mention is that gold had a nice run up in the past, month and a half or so, over 1900. We saw for the first time in 7 weeks, because I've been talking about this, that gold producers every single week for the last 6 weeks have been buying futures. And that's rare. I mean, usually they're sellers of futures because they own the physical, they're producers, they hedge, they sell forward. But they've been buying for the last 6 weeks. That to me was the sign that gold was going up. But in the last week, ending May 25th, for the first time in 7 weeks, they were aggressive sellers. And it raised their short position in gold to the highest level in almost 6 months. So pay attention. We'll see what happens. Anyway, again, happy Memorial Day to everybody. We think about and remember those who served in our armed forces and paid the ultimate sacrifice. And tomorrow we get rolling again, folks. Markets are open. Futures today were down across the board in equities. It's a thin day. Can't take much from that. The dollar was lower. We'll see what happens tomorrow with the week starting up. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Again, the month of June is going to be very interesting. All right? You got to be on top of what's happening here with respect to these flows. That will determine where the market goes. And by the way, if this has a negative impact and we do not, or I do not see the scope for new fiscal support at this time. I mean, we have current levels of fiscal support, but if you start cutting these benefits and then there's no new fiscal stimulus coming in, then you don't get just a regular correction in the market, which is a buy the dip correction. You get a down market that stays problematic because it's going to hit the economy. I've said this so many times. It's all about basic conditions. If basic conditions are good, stocks are going to go up. If basic conditions deteriorate and stay down, you're not going to see much going on with respect to the stock market. You got to be here. MMT Trader. See everybody tomorrow. Bye.